please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I would not expect any global stocks to be left unscathed in a global trade war.
It's about 35 down on the Nifty and about 60 down on the Sensex.
If we continue alliance, public will not accept. So probably two methods will be there. The breakup may be step by step may be there, or total breakup may be there.
They've revised the 2017-18 sugar production number to around 29.5 million tons. Now, that's not good news.
No relief as far as markets are concerned. 68 points lower on the Nifty, 10,180 is where we stand.
Correction has still some legs to go. Now, we're so close to 200-day moving average, perhaps we see a bit of a bounce. But, this is a market in which there's one large player who just wants to sell. And this perhaps could continue up until 31st March.
Bears tighten their grip as Dalal Street falls for the 6th straight day. Nifty has lost over 1,000 since hitting record highs end of January. 14 lakh crore in market cap has been wiped out in the last 30-odd days.
Global trade war fears spook investors yet again after free trade advocate Gary Cohn quits as Donald Trump's chief economic advisor. Asian stocks close in the red. European equities also lower in trade.
There's simply no respite for banks. The index sheds over 1%. PSU banks see sharper cuts. A report from Credit Suisse warns of treasury losses to the tune of 20,000 crore rupees for banks because of the rise in bond yields.
Mid-caps fall in tandem with the blue chips. Adani and Reliance ADAG Group stocks lead the fall. Adani Power, Enterprises and Adani Transmission closed down 7%. Reliance Capital, Reliance Infrastructure were also down 5% today.
The FMCG index is one green patch today as all other sectoral indices close in the red. ITC and Colgate lead with gains. Well, the markets have fallen for the 6th straight day, and those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you about 8 hours of market trading in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Naik. Hi, Prashant.
Lata, hi. And over the next 30 minutes, as always, we will dissect the top 5 market stories of the day. Our experts will join in to answer your questions. Today, we have Gaurang Shah of Geojit Financial Services and Ashwini Gujral, who will, of course, decipher the charts for us. Thanks very much, both of you, for being with us here on the show. Well, before we come to you with the questions, let's very quickly wrap up the day's happenings, the day's events, and how the sell-off really progressed. I mean, because it was red all over.
Well, I'm just going to repeat what the headline said. Gary Cohn, the so-called liberal voice or the pro-globalization voice in the Trump administration, resigned, and then you had red in Asia and to some extent in Europe as well. So we, in a sense, were falling in line, but we have long decoupled because of our domestic problems. So probably we could, we have seen sharper falls, especially in those vulnerable pockets, which is public sector banks, as well, the highly leveraged stocks like the Adani and ADAG group that you refer to, mid-caps, which were the prime performers last year, and the small caps. Actually, the small cap index from the year's highs are already down about 17%. And that was, the best performing index last year with 60%. My sense is that yesterday what changed is we saw DII selling, domestic funds selling. So possibly because a dividend tax will apply on dividend from mutual funds from April 1, probably mutual funds are also joining in the selling to make money while there is still some left on the table so that they can pay dividend to their investors before the tax starts. But anyway, we were talking about individual pockets of vulnerability and resilience. What were they?
I mean, so PSU banks, again, I mean, actually, it's all red for, I think, the first time on this show. I'm not going to mention one sector or stock which was higher. So PSU banks, infrastructure, pharmaceuticals, top losers, indices, index-wise, I mean, sectoral index-wise. Adani Ports, Power, Enterprises, Transmission, I mentioned those stocks earlier. They're on your screen. Look at the cuts. In terms of large stocks which lost, SBI, ICICI Bank, Reliance Industries, both private sector, public sector. I mean, public sector, of course, lost a lot more. Bharti, Airtel, Ambuja Cements and ONGC were the other top sort of big losers, nifty losers today. Broader market damage, you had Fortis, which was down about 9%. Canara Bank was down 7%. Bombay Dyeing ended down about 9%. JP Associates at one point was down almost 19-20%. It ended down 8%. Karnataka Bank 117, 8% lower. And big volumes. Canfin Homes was lower. Reliance Capital was lower. So it was a pretty deep and completely skewed towards declines as far as market breadth is concerned.
Well, you know, for the 6th straight day and probably for the past 3 or 4 days, we are also ending very close to the lowest point of the day. So on that note, let me welcome Gaurang and Ashwini. Ashwini, you know, would you have carried shorts? And is this pattern going to continue? Or will that, you know, that 200-day moving average, 10,120 or thereabouts, prove to be some kind of at least a temporary respite?
Well, if it was, it should have bounced back from there. And I don't expect a respite.
Okay.
If somebody wants to sell and go at any price, it's not like he was bearish at 11,000, he's buying at 10,200. He just wants out. And that should continue maybe for the rest of this month. So maybe if you have to buy, 31st of March would be a good place to buy, because by that time, everybody who wants to get out would have gotten out, and this large, you know, private bank selling and blue chip selling, which is generally held by FIIs, unless that comes to a halt, I don't think any level is sacrosanct. As far as, you know, till where do I believe that the bull market is on? Maybe 9,500, because that is the 50% zone of the entire rally from 8,000 to 11,000. So as long as 9,500 holds on, I think you should still consider that this is a bull market, and within that context, a 1,500 point Nifty downside and maybe a 4,000 to 5,000 bank Nifty downside will feel like a bear market, and you know, you have to trade it on the downside.
Right. Gaurang, you shopping?
Hi Lata, good evening. Well, definitely yes, and you know, all those stocks which we've been recommending for a long time, following the principles of earnings visibility, stable management, business strategy laid out well, and that reflects upon the future earnings to come by. So yes, I mean, selective names definitely look attractive. We are still a little bit circumspect about the public sector banks and select private sector banks. Every day you have some news or the other coming out which drags the Bank X or the Bank Nifty and the PSU Bank Nifty to a low bank index to a lower level. But I believe that autos, auto ancillary, FMCG, metals, consumer durable, these are some of the pockets wherein you can definitely nibble into. Not 100% again, because weakness is visible on the screen. So maybe about 25-30% depending upon your risk appetite. I think you should definitely try to get in.
Okay, so that is essentially the setup as far as markets are concerned. So let's move on to the second headline of the day. It all started early in Asian trade with news which hit the wires that White House Chief Economic Advisor Gary Cohn has resigned. This immediately led to a fall as far as global equities are concerned. It also led to fears of a trade war which could escalate. Asian and European markets were down on the back of this news by close. I mean, Asia was down quite a bit. The Nikkei closed over 0.7% in the red. The Hang Seng was down over 1%. The Shanghai index was down 0.5% in the red. Let's actually quickly listen into what the Dallas Fed President Robert Kaplan and Arvind Sanger of Geosphere Capital Management had to say about the possibility of escalation in trade wars.
Our trading relationship with Mexico and Canada is critical to U.S. competitiveness and U.S. jobs. So I don't want to jump to what might actually happen, what might be implemented, but I would say it might be wise just to wait a little bit and see how this unfolds. But it's so clearly in the interest of the United States to have strong trading relationships with both those countries. I'd be optimistic about how this actually gets implemented. The trade discussion at this point probably won't change my economic forecast because, as I've said to you on other issues before, let's see what's actually implemented. It may be different than is being discussed right now.
All sectors could be hurt, but the biggest high flyers have been technology stocks. Now, technology stocks in many cases are also global companies, and I would not expect any global stocks to be left unscathed in a global trade war. The problem you have in the U.S. is that the leader of the U.S. believes that free trade is bad. That is the first major leader in the world. Brexit was a bottom-up kind of a protest, but the leaders were more sane and adult, if I may call it that.
Okay, that was Arvind Sangur explaining why Brexit may not have been a threat to the ongoing global risk-on rally, but trade wars could be different since it is being since it is being championed by the president himself. Well, the third headline from the markets today: banks continue to reel under pressure. The Nifty Bank closed around 1.3% in the red. The PSU banks majorly contributing to the fall. That index is down 3.6%. This after a Credit Suisse report said large treasury losses of about 20,000 crore rupees are likely in the fourth quarter, purely because of the rise in bond yields. Actually, the bank index the PSU bank index has already fallen a goodish bit this year itself. I think it's something like a 20% fall in the year to date, and month to date itself it's a fall of about 7%. This week it is 6%, and today it was 3.5%. So it's come in for really seminal selling, and the bond losses are only adding to the problem, making the market even more skittish.
We've got a question actually. Amay has a question on Punjab National Bank. He wants to buy the shares of the bank, but he's not clear whether he should actually buy now or wait until the stock goes even lower. I think he's got a price in mind of 80 rupees or so. I don't know how he's gotten to that, but I mean, the recent low on PNB was about 92. It got to not 292 today. I think about 94, 95 or so. But let's put this to Ashwini first. Ashwini, what would you say?
See, over the last few years, since 2013 and maybe even earlier, I think 70, 75 has acted as a fairly strong support on PNB. So my sense is anybody who wants to buy should buy it closer to the 70, 75 zone. And what we've seen is once it hits those levels, it tends to rally back up for some reason to 230, 235. That's what happened, pre the recap also. So 70, 75, I think everything will start getting discounted. Now either the government is going to close down this bank, or if anything positive happens, from 75 to 125 could be an easy trade. So a lot of these PSU banks, including State Bank, are now getting to monthly support zones from where downsides could be a bit limited.
Okay, fine. It's not a long haul to 75, and I think it was last in June of 2016 that that level was scaled. Well, let's get to another questioner and another bank. Asit has IndusInd Bank's shares, 100 shares of that company, which he bought at 1730. He wants to know if he should hold or sell. Gaurang, you have an opinion on IndusInd Bank, 1730, sitting on minor losses, so he must have bought it recently.
Yes, Lata, we do have a positive coverage, and this is one of the banks amongst the private sector which has delivered, if I'm not mistaken and stand to be corrected, 18 consecutive quarters of sustainable raising the bar performance quarter on quarter. Well, never mind if you bought it at 1700 plus levels. If it goes down, you can add more, but this has been one of the relatively better performing banks in the entire banking, private as well as public sector universe.
Ashwini, it keeps hitting a roof at 1800, doesn't it?
Well, when similar banks are falling, I think holding on to a flat band probably works well. Whenever the markets turn and banks kind of come back into flavor, I think IndusInd and Kotak both have shown great resilience, and these could be the leaders of the next banking rally.
Okay, we will take a very quick break. Gaurang and Ashwini, stay with us, but more questions coming our way, and we'll pose them to our experts who will answer them. Stay tuned. Back in 2. Welcome back. You're with us here on Markets Today Talk Back. Ashwini Gujral, Gaurang Shah are today with us to answer your questions. We've got through 3 of the top market stories of the day. The 4th one is this. Mid-caps too were dragged down by the overall fall in the markets. The Nifty mid-cap index closed down 1% in the red. Adani and ADAG group stocks were amongst those that really led the fall. Cuts were anything between 5 and 8%. Adani Power, Adani Enterprises, Adani Transmission were down over 7%. Reliance Capital, Reliance Infrastructure were down over 5% today.
Okay, and now for the questions. There is a Yogesh who has a question on Adani Power. He has 10,000 shares of that company bought at 36 rupees a share. Wants to know if he should hold or sell. Now, Yogesh has not given us his holding period, but you want to take a jab at this, Ashwini? 36 rupees purchase price, 10,000 Adani Power shares.
You know, you buy it at any price and it will show you a lower price. You know, these are silly strategies. You buy a 2-digit stock and you hope that you've gotten a multi-bagger. In general, capex heavy stocks in this country, be it power or anything else, they don't tend to perform. The best stocks are consumer stocks. So I don't think much is going to come out here. So better exit and maybe try your hand at mid-cap IT stock.
And on to the final headline of the day today. The only green patch in a sea of red today was the FMCG index. ITC was up over 1.3%. It's a heavyweight, largest weighted stock, while Colgate closed close to 1% in the green. Other stocks that managed to close in the green were automobile companies like Ashok Leyland and Tata Motors, cement and power company Dalmia Bharat, and jewelry stock Titan were also higher in trade.
And now to some questions. Kumar has tweeted to us that he has 48 Wipro shares, which he had purchased at 225 rupees a piece. Wants a short-term and a long-term view on the stock. Gaurang, I'll come to you for the long-term view.
Well, on Wipro, Lata, you can definitely hold on to it just because the entire IT sector is performing well. I think this stock should also do well. But if you need to make better returns, then I think prudent to move into something like an Tech Mahindra Science Limited, NIT Technologies, or HCL Tech stroke Infosys amongst the big boys. TCS, the reason why I'm not taking this name is because it's very close to our target price. So better performing names you should switch on to.
Okay. A shorter term view, Ashwini?
See, the funny thing is the IT index is up much above its 200-day moving average. And this stock has today broken its 200-day moving average. So it's a dog within the IT space. Often, you know, these stocks, they don't tend to suddenly become outperformers. Like Gaurang said, NIT Tech, Hexaware, Mindtree, there are n number of other choices.
Okay, now to another question. Pradeep has 500 shares of Tata Motors, which he's paid 380 rupees a share for. He wants to know if he should hold or sell the stock. Gaurang?
Prashant, this has been one of the underperformers and we remain positive. The problem is, you know, issues related to JLR global numbers and the extra flab in terms of workforce plus the top level rejig. Now, the recent launches has given tailwind in terms of recouping the market share which it had lost. At the same time, the commercial vehicle business has also thrown in some traction. Now, if you are in for maybe about a year and a half to, then stay invested in Tata Motors because that's going to be a longish time shot. Plus, defense also is auguring well for Tata Motors. If you cannot give that much of time and if you just want 6, 8 months, 9 months, prudent to move into either M&M or a Maruti.
Okay. Well, actually, we don't have time to go to Ashwini, so I'll thank both of you gentlemen. But Tata Motors is not at its 52-week low. It is at its 104-week low. It was at a similar level exactly 2 years ago. We will have to wrap up this edition of Markets Today. On that note, thank you very much for watching. We'll be back early morning tomorrow.